Hey everyone, are we talking housing bubble prediction? What is up with the housing market this week? Hi, I'm Tristan Campanella, and thank you so much for checking out my video. Listen, I make these videos so that you can stay informed, and I offer helpful information so that you can make the best decisions for you. So when we're looking at the health of the housing market, we're going to be looking at how high prices are going and how the mortgage industry is doing. Home buyers, there is some hope in sight. I've been saying that for a little while, but I really do believe it. So thank you so much for watching, and if this is helpful, please share it and subscribe. It means a lot. So this week in the housing data, it shows that home sales and prices continue to normalize in extremely competitive environments such as San Diego, San Francisco, and LA. However, a resurgence of COVID-19 across the state has increased uncertainty about the broader economy moving forward, and it could be muting the recent uptick in new listings as public health concerns return to the forefront. Realtor.com and realtor optimism in California has also moderated in recent weeks. Still, home sales remain above pre-crisis levels and buyer demand remains strong. Even as the level continues to normalize after reaching 15-year highs, according to Realtor.com, new listings, which is a measure of sellers putting their homes up for sale, was up 6%. More homeowners continue to list their homes for sale compared to a year ago. That's going to help my home buyers out there. We've seen this trend in the 18 of the last 21 weeks. Notably, while new listings continue to lag behind a more normal 2019 pace, the gap is shrinking. By later this year, we could see more homes coming up for sale than we saw in 2019. Even though homes continue to sell quickly, thanks to high demand and limited supply, new listings are subtly shifting the balance of the market. Mortgage applications continue to rise, but still falling on year-over-year basis. The number of new purchase applications increased last week for the first time in 4 weeks. That follows a brief reduction in rates the previous week to levels not seen since early February. However, applications are still down 18% from where they were the first week of August in 2020. That increase is the streak of consecutive year-to-year declines in new mortgage applications to 12 weeks. But demand remains above 2019 levels. Even the intensity of the demand has eased slightly from the start of the year. So what's going on with interest rates? Interest rates are falling again. What's going on with interest rates? After falling to a 5-month low, Freddie Mac reported that the typical rate on a 30-year fixed rate mortgage increased to 2.87 from last week's 2.77. That is still a really low rate, guys. This coincides with a slight uptick in the 10-year treasuries, which rose 1.35% last week. However, daily rates show that interest rates are still relatively stable. In addition, recent concerns about future economic growth and increasing signs that the current bout of inflation could prove transitory in nature both suggest that the Fed may be less aggressive on normalizing rates than we initially. So that really means that rates are still incredibly low, everyone. It is still a great time to buy, especially as more homes are hitting the market, which will then stabilize the prices. Again, we're seeing homes actually have price reductions for the first time. So that is the wrap up for this week. We are at 2.87%. More homes are coming on the market, and relatively we're still in pretty optimistic mood about the housing market, even as it begins to stabilize. Thanks so much for watching your weekly update. And if I can help you in any way, buy, sell, or invest, my number's below. People call me all the time, and I absolutely love it.